So, welcome once again, each one to this class. So, we have been discussing about different ways in which credit decisions are taken and what are the important factors that are to be kept in mind before sanctioning a loan. I have also give you an insight on the credit tools that are available. And I told you that credit information reports, CIRs, given by credit information companies, CICs, are a valuable tool in ascertaining or finding out the existing repayment history of the borrower. Now, today I am going to discuss a concept or which is very important, that is regarding priority sector lending guidelines. Basically, what are priority sectors? What is priority sector lending? Why it is important for banks? So, can anyone tell me what are priority sectors?
So I can give some example.
Hmm.
Sir, agriculture, export, maybe education,
Hmm.
renewable energy. I read
Hmm.
it somewhere.
Okay. What else?
Uh,
Why priority sector lending is important?
सर ये वो सेक्टर्स हैं जो मतलब कंट्री की ग्रोथ के लिए जरूरी है।
Hmm. Okay. Who identifies priority sectors?
RBI.
Yes. Hmm. Ajit ji, any idea about it? Ajit,
Yes, sir. Yes, sir. Yes, sir.
tell me, what do you know about it?
Sir, actually, priority sectors are recognized by Reserve Bank of India,
Hmm.
and the priority sectors are agriculture, MSME, then weaker section, loan to weaker section,
Hmm.
housing loans, etc. Sir,
Okay.
priority sectors,
Hmm.
and there is a cap of 40% of ANBC, which is mandatory to be lent as priority sectors as per
Hmm.
guidelines.
Hmm.
Uh,
Okay.
then, yes, sir.
Okay. Jonis ji, any idea what are these? Mr. Wilson?
No, sir, no, sir.
Okay. So basically, if we look at the Indian banking sector, like we have discussed that Reserve Bank of India is the regulator of the banking sector. So because RBI is regulating the banking sector, and the government of India in conjunction with RBI, they have identified certain sectors which are extremely important for the growth of the nation, for the growth of the economy. So in India, all scheduled commercial banks, they have been given certain targets by Reserve Bank of India that the banks must sanction at least a certain percentage in these sectors. Because these sectors are important for the economy, they are called priority sectors. So there is a proper list that you will find on Reserve Bank of India's website on Master Circular, and the topic is Priority Sector Lending Guidelines. So one of the priority sectors are agriculture. Then you have MSME, export credit, education, social infrastructure, weaker sections, right? Will you be able to remember these? Agriculture, MSME, export credit, education, social infrastructure, weaker sections. Everyone?
Yes, sir.
Okay.
Yes, sir.
Now there is another thing called priority sector lending certificates. Anyone, any idea what are these PSLCs?
I think, sir, certificates which are used by banks, if they are like their priority targets are not met, no, in that case, they can purchase these certificates,
Very
something like
nice.
that.
Partly you are correct. What is your name?
Anup, sir, Anup, sir.
Okay, fine. I'll rename you. Yes, anyone else? Anyone else has any idea what these are? Priority sector lending certificates, PSLCs? So I told you that every bank has to achieve the targets given by Reserve Bank of India. Now, do you think every bank is able to achieve these targets? No. So some banks may be overachieving it and some banks may be underachieving it. Now, if you don't achieve the targets, then whatever the shortfall is, that amount has to be transferred to a fund with NABARD. Can anyone tell me what is the name of that fund? So the name of the fund is RIDF, Rural Infrastructure Development Fund. Have you heard about it? Anyone? Anyone? So guys,
Yes, sir.
you can get a question that what happens to the unachieved targets of priority sector? So the shortfall amount has to be deposited where? With the NABARD. And the name of the fund is RIDF, Rural Infrastructure Development Fund. So when banks are lending, and I told you priority sectors are like agriculture, MSME, education, social infrastructure, renewable energy, weaker sections. So bank A may overachieve these targets, whereas bank B and C may underachieve them. So what RBI has done that the banks they can trade in these PSLCs, priority sector lending certificates. So the bank that has overachieved the priority sector targets can issue these certificates. Okay. And the bank which were not able to complete or achieve their targets, they can purchase these priority sector lending certificates from those banks which overachieve their targets. Does it make sense or no? Hmm.
Sir, can you
Yes.
explain once more, sir?
Sure. I said there are three banks. Fine. You can think of any bank. Let's say Bank of Baroda, Federal Bank, HDFC. Now, out of these three banks, because Bank of Baroda is a government bank, so let's suppose Bank of Baroda achieved its targets of priority sector. In fact, it overachieved them. So, although 40% was the target, they achieved 44%. Have they overachieved or not?
Yes, achieved.
And
Yes, sir.
let's assume that HDFC could reach only 39% and Federal Bank could achieve only 38%. So these banks could not achieve the target. Yes or no? Federal Bank has a
Yes,
shortfall
sir.
of 2% and HDFC has a shortfall
Yes,
of
yes.
1%. So what RBI has done to incentivize those banks which have overachieved the targets, these banks can issue certificates. It is like transferring credit from the books of Bank of Baroda to the books of other banks. So because Bank of Baroda has overachieved it, so Bank of Baroda can issue priority sector lending certificates, PSLCs, right? They achieved 44%, whereas the target was 40%. So they are in excess by 4%. And both HDFC Bank and Federal Bank could not achieve the targets. One has a shortfall of 2% and the other bank has shortfall of 1%. So these banks, they can buy those priority sector lending certificates issued by whom? Bank of Baroda. So Bank of Baroda would be getting interest income or a certain fee on these certificates. So although these loans, they will remain on the books of Bank of Baroda. Okay, the borrower will belong to Bank of Baroda, but it will reflect on the books of Federal Bank and HDFC Bank as well. So on HDFC, it will be 1% because they could not achieve target by 1%. And Federal Bank can buy these priority sector lending for 2% of the shortfall. Did you get it now? Guys?
Yes, sir.
सर जो बैंक आरआईडीएफ में ये डिपॉजिट करवाता है फंड, तो कोई इंटरेस्ट वगैरह भी मिलता है क्या उस पे?
नहीं मिलता इंटरेस्ट, तभी तो नुकसान है. See, you as a bank have funds which you want to use by giving loans. And the advantage you get by giving loans is that you earn interest income. Yes or no? But
Yes, sir.
this is the catch that if you do not achieve the targets, which the RBI has set. Let's say the target was 40% and you achieved only 37%. So what is the shortfall?
3%.
3%.
So now either you buy priority sector lending certificates or you pay 3% to Rural Infrastructure Development Fund, which is maintained with NABARD.
तो जिसको PSLC खरीदेंगे
Hmm.
तो लेट्स से 3% का PSLC खरीद लिया
Hmm.
और तो फेडरल बैंक का 40% पूरा दिख रहा है,
Yes.
लेकिन इसके एवज में फेडरल बैंक
एक फीस,
बैंक ऑफ बड़ौदा को कुछ फीस दे रहा है।
yes, for buying those certificates. Absolutely.
तो फिर सर यहाँ तो चलिए वहां पे अगर हम फंड पार्क कर रहे हैं RIDF में
Hmm.
तो एटलीस्ट फीस नहीं लग रही, यहाँ तो हम पैसा भी दे रहे हैं और फीस भी दे रहे हैं।
ऐसा कहाँ दे रहे हैं हम फीस ही तो दे रहे हैं।
PSLC खरीदने के लिए पैसा नहीं लगेगा सर?
The only thing you have to pay is to pay the fees. If you are giving away your funds to RIDF, you are losing on, let's say, 8.50% 1 year MCLR.
यस सर।
Whereas in order to buy these assets in the form of PSLCs from Federal Bank or from Bank of Baroda, you may pay only 2% or 3%. Which is better, paying 8% or 2-3%?
Okay, I thought along with the fees, fund has to be given.
No, 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 no.
Only the
और
fee.
ये सर कब तक
Absolutely.
डिपॉजिट करवा के रखना पड़ता है?
For financial year, you have to show your position when the
Oh.
books are to be audited. That means for every quarterly closing. It is just like you are trading. How many of you have heard about commercial papers and certificate of deposits? And what are these? Tell me, please.
Money market instruments.
Very nice. Little more specific.
Like company issues commercial papers, they will be trading.
Very nice. What else?
These are issued for 1 year.
That he already said, no? When he said these are money market instruments, so any instrument that has a validity of up to 1 year are short-term instruments and they are classified as money market instruments. Now, do you guys first of all know what money market is? Who regulates money market? What is money market? Do you guys have idea? Tell me, you can be frank, no issues.
यहाँ
How
पे
many
सर
of
बॉन्ड्स वगैरह की ट्रेडिंग होती है, गवर्नमेंट बॉन्ड्स को वजह से।
how many of you know about money market and how many of you do not know about money market?
सर मतलब
Have an-
पढ़ा है बहुत पहले, लेकिन अब एक्सप्लेन नहीं कर पाएंगे।
Yes. Try to speak in English. Most of you will be giving interview in English, so please speak in English only.
Okay, sir.
Yes.
Sir, money
You
market
haven't
is
told
a
how it
short-term
is.
financial instrument
Hmm.
up to 1 year only.
And in that,
Uh,
Let him
there are
finish.
like
It's like from 1 night to 1 year. The span may be from 1 night to 1 year.
So
There
money
are like
market is a market. So first of all, it is a market where money can be borrowed or lent for up to 1 year. Okay. So if money has to be given or borrowed for more than 1 year, then it is not money market. So all the instruments that you can use in the money market will have a maximum validity of how much?
1 year.
1 year.
1 year.
Yes. Now, how many of you have heard about treasury bills?
Yes, sir.
Yes, sir.
yes, sir.
What is it?
Like government issues the treasury bill, state government and central government. Those can be traded or those can be by institutions or by retail persons.
Short term, that is also money market instrument, sir.
Yeah,
That is
yeah.
also
That's in a period of 90, 180 and 364, having maturity period of.
Okay. Now I'm going to use some more terms. Everyone, please be attentive. How many of you have heard these terms? Call money, notice money, term money.
Yes, sir.
Yes,
Yeah.
sir.
Yeah, what are these?
Call money, I think one day for a 1 day notice. I mean,
Notice money
one
is 2 to 15 days. 1 day is call money,
call money.
and
Yeah.
call money is for up to 364 days. Let's say less than 1 year.
Hmm. Anyone else? He was partly correct.
Call money repayable on the 1 day only. Then
Okay.
notice money.
Yes. So
Uh,
you will remember it like CNT,
Call,
call notice term. Okay. How will you
call
remember
money.
it?
Call notice term.
CNT.
CNT.
Just like you have CNG, this is CNT, call notice term. So
Mm.
when the funds are to be borrowed or lent for only 1 day, it is call money.
Mm.
When it is from 2 days to 14 days, it
14
is
days.
notice money.
Notice money.
Okay.
Above
And
14
for
days.
period above 14 days, up to 1 year, basically it is also up to 90 days, but let's consider it for 1 year, it is term money. Now, who are borrowing and who are lending?
Banks with
Banks and
excess.
institutions.
Banks
Institutions. Financial institutions.
and you have some entities called primary dealers.
Private traders.
Okay.
Yes.
So can you and me do anything in money markets?
No.
Yes.
No.
No.
I think a year ago, Reserve Bank of allowed has allowed retail investors to invest through money market instruments. Now even retail investors can invest in government bonds. You don't know this. Okay, we will discuss it. So if we talk about the major money market participants, they are banks, they are other financial institutions. Basically, they are called All India financial institutions and primary dealers. Now, you must have heard about CRR, SLR. Have you heard about it?
Yes,
Yes,
sir.
Yes,
sir.
sir.
What are those?
The bank
CRR
should
is
be
CRR
cash.
cash reserve ratio.
Hmm?
SLR is
SLR is
statutory liquid.
Oh, no, you are telling the
statutory.
full form. What are these actually?
bank should maintain minimum CRR in form of
Yeah,
cash.
somebody said statutory ratios.
Uh,
So what does that mean? These are
That is
The
statutory
bank has
requirements.
like
to
they should maintain
bank
some
has
assets.
to
Bank should maintain some
participate.
assets. Like
No, 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 no,
security.
no.
these are
Statutory
compulsorily
requirements, these. What? These are
compulsory requirement which bank has to maintain in the form of
still,
like
you
uh,
are not specific. When we
uh,
say statutory requirement, that means that is a requirement as per law.
law. Yes, sir.
Statute means law.
Law. Yeah.
Banking Regulation Act specifies. It's an act, right? So these are
Yes.
Yeah.
statutory requirements, and RBI has the power to increase or decrease these as per market conditions, right?
Yes.
So these are there to provide stability and liquidity. Now, does bank earn anything on CRR?
No.
No, sir.
No.
No.
So it is certain amount of funds that the banks have to keep with RBI, and banks are not earning anything on it as of now, right? And then
Yes, sir.
SLR is statutory liquidity ratio. Again, the word is statutory. That means requirement as per law. So statutory liquidity ratio is again decided by RBI, and this is to provide liquidity. Now, if a bank is not able to maintain these CRR and SLR, then RBI can penalize them. So just like I gave you the example of priority sector lending certificates. So similarly here in the money market, there is a software of RBI called eKuber. What is it called?
E-Kuber.
E-Kuber.
Yes. So all these entities which are basically allowed by RBI, there is a master circle of RBI. So only those entities that are eligible are part of this money market. Only they can access this through what? Through eKuber. So again, like I gave you the example, let's say there are 12 public sector banks and some other foreign banks and private banks. And let's say again, Bank of Baroda is holding more amount at its disposal. It has ideal funds. And so it is very comfortable in terms of CRR and SLR. And let's say there are other banks who are facing shortfall. So depending on the period of requirement, let's say IDBI bank wants funds for just one day. So IDBI will do what? It will seek funds under call money market. Yes or no? Because under call money market, you get funds for only one day. And because requirement of IDBI is for one day, so it will seek what? It will seek call money, no? Did you
Yes,
get
sir.
it? Is it clear?
Yes, sir.
Yes, sir.
Similarly, let's say for a period between 2 to 14 days, what we call as notice money, ICICI Bank is having excess funds. And there are two banks that are having lesser funds. So again, these banks can approach ICICI Bank for the excess funds. Yes or no?
Yes, sir.
Yes, sir.
So when this transaction is happening, I see the bank that has the extra funds, they are going to get some interest. Yes or no?
Yes, sir.
Yes.
Now, is it clear?
So
So,
Yes,
what are
sir.
the interest rates in general for call
no,
money and notice?
that is decided by your existing repo rates and the market conditions, depending on how much liquidity is there or how much less lack of liquidity is there. Now, I told you the instruments of money market are CNT, call, notice, term, right?
Yes, sir.
Now, let's talk about treasury bills. So usually for one day it is call money, from 2 to 14 days it is notice money, and from 14 days, above 14 days, that means from 15 days to 90 days it is term money. Now what do we have from 91 days to 364 days? So we have treasury bills. Treasury bills can be issued for 91 days, 182 days, or 364 days, right? And then we have commercial papers and certificate of deposits. Is it clear?
Yes, sir.
Now
Yes.
comes the part, how does the government raise money? How does RBI print money? Anyone?
Government raise money by issuing treasury bills, like
Hmm.
like
Like,
project any projects they will be issuing, so to invest, like government bonds will be there.
mhm. Okay, kindly discuss among yourself. I'll be back in couple of minutes. So, yeah, he was partly correct when he said this is how basically government borrows money. Now, do you know that government borrows money from whom?
Government borrows money from the RBI, sir.
Yes. Now, why will RBI give money to government?
Government will,
Marginal standing facility, I think it is called.
Government will show stick to
government will,
RBI.
no, government will, s-
Sir, RBI is owned by the
treasury
government.
certificate.
Hmm? Now, as per the law, this is one of the functions of RBI to print currency. Yes or no?
Yes, sir.
And another
Yes, sir.
function is that RBI is government to the banker, right?
Sir.
But when it comes to printing money, RBI wants some security.
Hmm.
Okay, you must have read that initially, whenever RBI used to print money, there is a certain portion of gold that is kept, and against that, RBI prints money, right? So every year, depending on the budget, when the budget comes, like in couple of days' time, this year's budget will be coming. So you will come across some definitions like fiscal deficit, budget deficit, right? So basically, when the revenues that the government is going to get, when they are less than the expenditure that the government is going to make, it is called what? Fiscal deficit. That means your income is less, but your expenses are high. Yes or no?
Yes, sir.
Bhai, if you are earning, for example, 1.50 lakh rupees, but your expenses are 1.60 lakh, how are you going to finance this 10,000 rupees? Are you going to take loan or not?
Yes, sir.
There is no other way. Yes or no?
Yes, sir.
Yes, sir.
Similarly, this time you will find reading the budget interesting. So you see, if the income of from the revenues for the budget government, if it is less than the expenditure, then we are having what? Fiscal deficit. So now, usually to overcome fiscal deficit, government borrows money from whom? RBI. But we have another act, what we call as FRBM Act, Fiscal Responsibility and Budget Management Act. I think it is 2005. FRBM Act 2005. Have you heard about this FRBM?
Yes. I mean,
It is, yeah. You heard about it? It is FRBM Act 2003. So basically, government cannot keep on borrowing funds because that will put undue pressure on the economy, on the state. So this act is there that government should manage its borrowings. There should be a limit. Okay. So now I told you that RBI wants securities. RBI says, give us security, we will print money for you. So what government has done, and this is how this entire thing functions, works, is that government will ask RBI that you issue treasury bills, okay, on our behalf. So RBI is issuing treasury bills on whose behalf? Government, right? Now, depending on whether these treasury bills are for 91 days or for a 180-day period or 364-day period, bidding is done. So now who are to buy these securities? Banks. Banks must hold these treasury bills as securities under SLR. Is it clear? Guys, is it clear as of now?
Yes.
Yes,
So
so
sir.
what
just
RBI and government have done is that banks, it has been made mandatory for the banks that they must invest in what? SLR.
Treasury.
SLR,
And one of the constituents of SLR is
treasury
treasury
bills.
bills. So treasury bills can be for 91 days, 182 days, or 364 days.
Mm-hmm.
Okay. Who is issuing treasury bills?
RBI,
RBI. On whose behalf?
government's
The
behalf,
government.
Government. And who's going to buy these bills?
The
banks,
bank.
commercial
Banks.
banks.
Banks. So now a bidding happens. So for this, you will find a schedule. Basically, RBI announces that we are going to do open market operations on so and so date. Okay. So that RBI will say that we are going to come up with issuance of treasury bills of 91 days for, let's say, 10,000 crores. And the coupon rate is, it's a kind of rate of interest, and they will quote the coupon is 6.20. Okay. So now any bank which agrees for the lowest rate of interest is going to get those treasury bills. Are you getting it?
Sir, if the coupon rate is 6.20,
Any bank that bids at the highest point. Yeah, tell me 6.20.
sir, if the coupon rate is 6.20, basically they are saying that you have to quote below to
No,
6.20.
that is why I changed it. No, above. That is the minimum threshold that I have set. There are two things. One is when RBI is taking money from the banks, and other is when RBI is giving money to the banks. Understand this first. At times, banks will come to RBI to borrow money from RBI. So will RBI charge a lower rate of interest or a higher rate of interest?
Higher rate of interest.
Always remember that RBI will be beneficiary in every trade. Who will ultimately benefit?
RBI.
RBI. So if RBI is going to give money, RBI is going to charge a higher rate of interest. But if RBI is going to take money from the banks, then that will be at the lowest rate of
Lower
interest
rate.
possible. Got it? And for both the transactions, bidding happens. Is it clear?
Yes, repo and reverse repo, right?
Absolutely. That is why I said these are market operations. You call them open market operations. There is another thing, which is monetary policy. How many of you have heard about it?
Yes, sir.
What is
Yes,
monetary
sir.
policy? This is a very important question, and the interviewers, they definitely ask this question, especially if interview happens around the budget time.
So Monetary Policy Committee of RBI meets bi-monthly to discuss about the monetary inflation.
Very nice. Now tell me, what is the difference between monetary policy and fiscal policy?
So
Fiscal
fiscal policy is
So
Government
fiscal
of India
policies
takes
are
care.
undertaken by RBI, and the other one is by monetary policies are by
Finance, Ministry of Finance.
Guys, those of you who are not replying or participating, I will request you to please participate. Okay, even if you don't know, even if you say something wrong, not a problem. I will get an idea. Plus, but kindly participate. So who gives monetary policy and who gives fiscal policy?
Monetary policy given by RBI and fiscal policy is Government of India or Finance.
Yeah. So what is fiscal policy basically?
Fiscal
It's,
policy is the plan for the whole year, sir, but monetary policy keeps changing.
No,
Fiscal
still
policy is
a little more specific answer.
the government's expenditure and income, and it is calculated through the fiscal policy.
Yeah, so basically the budget that comes, annual financial statement, that is the fiscal policy. And it is given by Government of India. Whereas monetary policy is given by RBI. And like someone of you spoke about inflation. So basically it is about managing money, about managing liquidity, inflation in the market. Is it clear now?
Yes, sir.
So the
Yes, sir.
instruments that are available with RBI to control monetary policy are called monetary policy instruments. They are called what?
Monetary
Policy.
policy instruments.
Yes. Repo rate, reverse repo rate, LAF, liquidity adjustment facility. These are all different monetary policy instruments that are available with RBI. If there is low liquidity in the market, RBI can release liquidity by easing rate of interest, by lowering rate of interest. If interest rates are reduced, that means banks can borrow funds from RBI at a lower rate of interest. That means now they can give loans at a lower rate of interest. That means people can get loans at a lower rate of interest. That means people can do more consumption. They can take more loans. When do you think people are going to take more loans? When rate of interest is high or when rate of interest is low?
Low.
Rate of interest is low.
Rate of
Yes.
interest
Now,
low.
who decides this lowering or hiring of interest rates?
Monetary
RBI.
RBI. Yes. So depending upon the condition in the economy, how the demand is, right? What is the rate of inflation? So now RBI has in fact been given target that they must contain the retail inflation to a certain level. Can anyone tell me what that is?
Retail inflation.
3.5, not wrong.
4 plus minus 2%.
Oh, yeah. 4 plus minus
Okay.
2.
So even if it goes up to 6 or it goes to 2, it is acceptable, but it has to be kept within this level. Got it? So the monetary policy instruments that the RBI will take are done keeping this in mind, that the inflation should be kept within this target. If inflation increases, is it good for the government or bad for the government?
Bad for the government.
Why?
Like cost of the goods will be increased.
Yes, also because since people will find things to be costly, this creates anti-government sentiment, right? So that is why, especially in a country like India, where inflation is very important, this puts enormous pressure on RBI. So RBI does everything in its control to keep the inflation between this target of 4 plus minus 2%. Is it clear now?
Yes.
Yes, sir.
So what after money market? I told you money market is for up to 1 year, short-term instruments. What is the other market after money market?
Secondary market.
Sorry,
Secondary market.
what is that?
Capital market maybe.
Yes. So basically, secondary market is your capital market. So in capital market, you are raising funds for long term. Now, who's regulating secondary market?
SEBI.
Yes.
SEBI.
Now, basically,
SEBI.
in capital market also, you have two markets. One is called primary market and other is called secondary market. What is primary market in capital market?
Where first time the
Very
share
nice. So when the
Promoters
company
buy.
comes with a public issue for the first time, what we call as IPO,
IPO.
initial public offering, that is part of what?
Primary market.
Primary market. And once the share is listed on in the bourses, on the exchange, then it is part of secondary market.
Secondary market.
Then trading can happen for those shares. Is it clear?
Yes.
Yes, sir.
Any doubt? Any company can raise funds in capital market, or is there any criteria?
Listed company.
What do you mean by listed company? Only once the company wants to get itself listed, it will come out with an IPO, no?
Yes, sir.
Any company which fulfills the criteria laid by a SEBI can think of listing itself. Yes or no? You must have heard
Yes,
about
Yes,
sir.
sir.
draft, red herring prospectus. Have you heard about such terms? Book building process. So there is a proper process, proper way how a company can get listed. But for that, it need to take whose permission?
SEBI.
SEBI's permission.
SEBI's.
For example, you are a business, you are a company, you want to start a banking business. Who is going to give you permission?
RBI.
RBI.
And there is a certain criteria for that, yes or no?
Yes.
Yes, sir.
This is applicable in every sector. If you are someone who wants to set up an insurance company, you need to obtain license from whom?
IRDA.
IRDA.
ARDA.
Yes. Now, every regulator has its own requirement that if you want to do insurance business, you should have this much capital. If you want to do the business of banking, you should have this much capital. If you want to be a private limited company, you should have this much capital. If you are a public limited company, you should have minimum this much capital. Yes or no?
Yes,
Yes,
sir.
sir.
So
Yes.
who is setting this criteria? The regulatory body sets this
Regulator.
criteria as per law. So in the law, you will not find that minimum this should be the capital. Some powers are given to the regulatory body to decide on its own. Fine.
Yes, sir.
Are things making sense?
Yes, sir.
So, for example, you are a corporate house, you are a company like Reliance or Tata's, okay, or Adani. Now, you are in want of funds, you require funds. What are different avenues available to you? Please tell me.
Borrowing from banks.
Okay, what else?
The initial public offering, sir.
That means share market. What
Yes,
else?
sir.
Can you repeat
External
the question?
borrowings.
External borrowings means?
So the
Borrowings
company
from other
debenture,
companies.
debt debentures.
What else?
Can you, sir, can you repeat the question? I didn't get you.
Can anyone else repeat the question?
Company requires funds. What can it do?
Yes. How can a company raise funds? What are the different ways available for a company to raise funds?
It can take from investors.
Okay.
Then share market is there. IPO or let's say
Hmm?
IPO can be there if it's not listed company yet.
So that will become the investors, no?
But there are like angel investors and
Very
everything.
nice. This is what I wanted to hear. That means even before the company is listed, the company can still get money from different kind of investors. So depending on who is investing, there is a specific name given for it.
Venture
Okay.
capitalist.
Like when you are small, you are called a baby. When you grow, you are called a child. When you grow, you become a boy or a girl. When you grow, you become a man or a woman. Yes or no?
Yes.
But you are the same person, right? So money may still be coming, but how it is coming, from where it is coming, at which stage it is coming, different names are given. If you are taking money through capital market by issuing the shares for the first time, it is IPO. However, if you are a listed company, then you are coming, then it is a follow-on public offer, FPO. If you are allowing only existing shareholders to invest, then it is a rights issue. It is a type of FPO, but it is rights issue. Okay. If you want a global investor to invest, then it is foreign direct investment, FDI. Yes or no?
Yes.
Facebook buying 9.99% stake in Reliance or Geo. This is what? Foreign direct investment, FDI. Right? Now, let's say an insurance company in the US wants to invest in India. What will it be called? FPI, foreign portfolio investor. Have you heard about FPIs?
Yes.
FIIs, foreign institutional investors. FPIs, foreign portfolio investors.
So
Right?
both are same or different?
They are different. There is a little difference, but they are different. So FIIs, FPIs. Then somebody said external borrowings. What are external borrowings?
Uh, Borrowing from other outside country.
Wow. Specific answer. You are a banker.
Uh,
Basically, I modified it. External borrowings are also called external commercial borrowings. Now, what are these?
ECB.
What are external commercial borrowings? Buyer's credit, supplier's credits. Have you heard about it?
Yes, sir.
Yes.
Bad debt can be taken.
Sorry?
Bad debts. What are the bad debts were there? No, that can be also.
Bad debts.
Uh,
No,
No.
that is not directly
No.
relevant to this.
okay. Okay.
Rashmi, you there?
Yes, sir. Yes, sir.
Yeah. So are you understanding whatever is being shared?
Yes, sir. Yes, sir.
Dipesh? Dipesh? This is a way to check as well, no, whether the candidate is actually there or just signed in. Kalpesh?
Yeah, sir, I'm there.
Prithvi?
Sir, I'm here only. I'm here only.
Okay.
Dipesh.
Prithvi?
Yes, sir. I am here.
Sandeep? Vikas?
Yes, sir. Yes, sir.
Mr. Wilson?
Yes, sir. Yes, sir.
Okay. So see, because you're working in a bank, it is very important that you should understand how, money behaves. Okay, the journey of money. What this will do, this will help you to understand risks. Like, can anyone tell me the latest news from the financial markets? What has happened recently?
On DeepSeek, the AI.
Yes. So a new latest technology coming from China at a very lesser price than what was being offered by the existing chat GPT or other AI tools has done what? What has happened?
They have
Nvidia has lost around 12% of its market cap.
Who has lost?
Uh, in sir,
Nvidia.
Nvidia, sir, I said that.
Okay. Okay, so it is important for you to understand this, why this has happened. Now, for example, if you were about to sanction a loan to a company like Nvidia, just let's take an example, right? So basically, that means they were enjoying market dominance. They were manufacturing such products or were providing such services which were very unique, right? But all of a sudden, a new company comes which offers the same services at a very cheap price. So, what will happen to that existing company? It will lose business, it will lose value, yes or no?
Yes, sir.
And what if you had given loan to such a company? Don't you think that your loan can turn bad?
Yes, maybe.
Right. So that is why in loans, you do constant follow up. You're always monitoring your portfolio. This is equivalent, this is acceptable or applicable for portfolios as well. For example, let's say you have invested in share market or through mutual funds. So, you are continuously monitoring the performance of your portfolio. If you see your portfolio is going negative, don't you think you need to make certain changes? Hmm? And in order to make changes, first you should understand what changes you need to make. Yes or no?
Yes, sir.
Yes.
Same is with lending. Because when you are lending for a project, you must do due diligence that I have told you on the borrower. But when it comes on the project, you must understand the project as well. What the project is, what is the sector, what are the sectoral guidelines, what are the regulatory guidelines, what does the law say about it. Like I had told you, no, let's say you are financing a hydroelectric project, but what if the dam which is going to receive water, let's say, is coming from two different states? So don't you think there is a possibility that there may be some dispute between those two states in future?
Yes, sir.
Yes or no?
Yes,
Yes,
sir.
sir.
So whenever you are financing on any project, you've got to understand it at that level. You will be doing ratio analysis. You will be doing the liquidity test, the solvency test, right? But at the same time, you've got to check the environment as well. For example, if the borrower is in the leather industry, okay, and let's say you are in, for example, Bangalore, okay. Now, whether the existing government policies allow for leather industry in Bangalore, right? What are the pollution control board's norms? What if the norms are very stringent and the borrower is not able to fulfill them or abide by them? Do you think you can sanction such a loan? No.
No.
If you do, and tomorrow if the law enforcement agents they take any action, then the loan will turn bad, the account will turn NPA. So what is you see the underlying risk challenge for the banker or a credit officer is to identify the credit risk. You have to identify the risks and then you are going to take risk which can be managed, which can be mitigated, or which is lowest. Can you lend without taking any risk? No.
No, sir.
No risk, no income, no profit, no gain. Right? Because risk is kind of directly proportional to the risk that you're taking. If you are willing to take high risk, you can get high profits. But if you take no risks, then nothing. So, as credit officers, as credit analysts, our role is to understand, identify these risks. You have to identify them, you have to understand them, then you have to see how you can mitigate them. For example, why do you think when bank is sanctioning a business loan, bank asks for collateral security? What is the need? Why?
If the loan turns bad, then the collateral security can be sold and the amount can be recovered.
Yes. So basically, bank is having option B, that what if the account turns bad? Where will I go? Where will the bank go? So bank wants some security. Can you tell me a loan where security is not required for business loans? Is there any scheme?
Yes, sir.
The
CGTMS.
CGTMSE
Yes, sir.
loans are
Mudra scheme.
What is Mudra scheme and what is CGTMSC scheme? Two people have given two different names.
Sir, up
CGTMS
to
is
10 lakhs we
scheme.
can give an Mudra loan, sir.
No. This has changed. Okay. Someone else.
Sir, actually 20
CGTMS
lakhs is
schemes are,
Yeah. Anyone else?
sir, central government will be giving the guarantee for these schemes instead of collateral security. That is called CGTMS schemes.
Central government trust actually.
Chalo, let me ask you two terms. These are very frequently used in the US market or the international markets. One is CBS, MBS, ABS. These are securities. Can anyone tell me what are these? CBS, ABS, MBS. The S stands for securities. Collateral based securities are called CBS.
Order based, okay.
Mortgage based securities are called MBS.
Asset base.
Asset backed or based securities are called ABS. Have you heard about this now? Okay.
No, sir, this is the first time.
How many of you have heard about SURFACE?
Yes, sir,
Yes,
we
sir.
had.
Yes, sir.
When a bank is writing off bad assets and a company comes and buy those assets, what is that company called?
Asset reconstruction
ARC. Very nice. ARC. Asset Reconstruction Company. So what happens is this happens very frequently in the developed financial systems. Of course, it happens in India as well, but in US and other developed financial markets, it happens very frequently. This is a pure business. So for example, you are a bank and now you give different loans. You give car loans, you give housing loans, right? Now, in which of the following loans are you taking or are you doing a mortgage? Car loan or a housing loan?
Housing loan.
So
Housing loan.
if you create a portfolio of mortgage backed securities, can you keep a car loan in that?
no.
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 If you are creating a portfolio of asset backed securities, can you keep a housing loan and a car loan in that?
Yes, we can.
Yes.
Yes.
Both are backed by some security, some asset. Are you understanding this?
Yes,
Yes,
sir.
sir.
So how you make the bundle, accordingly you name it. Fine. You understanding it? So if different assets are pooled together and then they are sold, so they become what? Asset-backed securities.
Asset backed security.
But only if those loans where there is any mortgage, if they are pooled together, then they are called mortgage-based securities. Similarly, if there are loans that are backed by any collateral, they will be called what? Collateral backed securities. Okay. So these can be
Collateral.
sold by the bank and these can be bought by a company.
So collateral can be a mortgaged house as well.
Yes, absolutely.
So what will be the difference? Means where will be
This
the
is just
difference?
to give you an example, bhai. They are almost the same thing. There is not much difference. There is very little difference. Like I told you, in asset-based securities, you can have every kind of loan.
So can we take it like if there is a primary security like stock is there? And if there is a house kept as collateral,
Hmm.
then the house will be considered as
But it's a
collateral.
single loan, no? If there is collateral, it will be considered as collateral backed loan.
Okay, but let's say if it's a housing loan only, then there is no primary security. The primary security itself is the mortgaged house.
It may still be called a collateral backed security or mortgage based securities or asset based securities. You can call it anything.
Okay, sir.
Got it? But you can't call a car loan as a mortgage based security, no? Can you?
No, sir. It's
Yes.
hypothetical.
Yes. So this is just to give you an example. My question was on CGTMSC and Mudra. So basically, one is collateral and another is collateral free loan. What is a collateral free loan?
Mudra.
As per government guidelines, all business loans to MSMEs up to rupees 20 lakh are to be sanctioned under what? Mudra only. Earlier this was 10 lakh. Now this has been increased to what?
20 lakh.
This will be one question. Right.
Sir,
Now this is
sir,
collateral free
sir,
loan.
sir, sir, one doubt, sir. Sir, for Mudra loans, we cannot sanction for fresh loan as 20 lakhs.
Yes, yes.
Only
You are
10 lakhs,
absolutely right.
only
those
10 lakhs we can.
borrowers, only
Who
those
have taken
borrowers
10
who
lakh.
had taken some loan in the past,
Yes.
some Mudra loan, and they
Yes, yes.
repaid it, they are eligible.
Yes.
But if somebody asks you what is the limit of collateral free Mudra loans, it is 20
Yes,
lakh.
that's right. 20 lakhs only, sir. Yes,
Yes.
that's right.
Okay, that is why you have to. Yeah, you
Sir,
are right
one more
that
doubt,
the
sir.
fresh borrower cannot be given directly loan above 10 lakhs under Mudra.
Sir,
Okay.
that also covered by the government guarantee CGFMU. Is it right, sir?
Yes, yes. Now, CGFMU has actually become CGTMSC. They are almost one and the same thing. There is no much difference now. CGTMSC is a trust. What does CGTMSC stand for? Credit Guarantee Trust for Micro and Small Enterprises. Right? Now, before I come into micro, small, let me ask you, what are MSMEs?
Micro, small, and medium enterprises.
Rashmi ji, I haven't heard your voice. Kindly participate. Sandeep.
Yes, sir.
What are MSMEs?
Manufacturing, trading, and service enterprises.
Rashmi. Yes, Rashmi.
Sir, MSME stands for medium, small, and micro enterprises.
No, micro, small, medium. Micro, small,
and
medium. Which of the three is the smallest?
Micro.
Which of the three is the largest?
Medium.
What about after medium? After medium enterprises?
Large.
Large corporates, large enterprises. Very nice. So now, again, there is an act, MSME Act. In 2020, it was amended. Amended means changes were made and the definition of MSMEs was modified. So what are MSME? Someone of you said manufacturing, trade, services. Absolutely right. A business which is into manufacturing can be a micro manufacturing enterprise, small manufacturing enterprise, or medium manufacturing enterprise. Similarly, it can be a micro trading enterprise, small trading enterprise, or a medium trading enterprise. It can be a micro service enterprise. It can be a small service enterprise, and it can be a medium service enterprise, right? But what are micro, small, medium enterprises? So there are two ways of classifying it. First is on the basis of investment in plant and machinery, and the other is turnover. So a business that has investment of up to rupees 1 crore in plant and machinery or turnover of up to rupees 5 crore is a micro enterprise. So a business, this question may come, For example, there is a business, they have investment in plant and machinery of 70 lakh, but their turnover is 7 crore. What kind of business is it?
Small.
Small.
Small only.
Why? Because on the basis of turnover, they are breaching the criteria of micro enterprise, right?
Yes.
Now,
Yes, sir.
if we talk about small enterprise, so if the investment in plant and machinery is more than 1 crore and it is up to
10.
10 crores,
10 crores.
then it is a small enterprise.
Small.
And the turnover has to be up to 50 crores into
50
5.
crore.
Into 5. Multiply the criteria of investment in plant and machinery by 5. Like in micro, investment in plant and machinery was 1 crore. So turnover was into 5 crore. Right? For small enterprises, the investment in plant and machinery is 10 crore. So the turnover is into 50 crores. 10 into 5, 50. And for medium enterprises, the investment in plant and machinery should be more than 10 crores and up to 50 crores.
50 crores.
And the turnover has to be up to 250 crores.
250 crores.
Got it? Now in CGTMSC, it is trusts, credit guarantee trust. This trust is doing what? It is guaranteeing credit. Credit guarantee trust for micro and small enterprises. That means medium enterprises are not eligible. They are not welcomed by CGTMSC. So if they ask you in the interview, are medium and large enterprises eligible under CGTMSC?
No.
No.
No. Which are the enterprises that are eligible?
Micro and small.
Micro
Micro
enterprises.
and small. So now it is
Micro
a
and small.
trust formed by the
Sir.
government to guarantee credit. Yes.
So one thing came into my mind. Like you said that 5 times turnover should be there. So isn't it directly related to the loan amount that can be given turnover ka 20%
No,
that
no,
we
no,
give?
no. That is different thing. This is just to explain you to key so that you remember the figures.
Okay, sir.
There is no direct relation as such. Please remember it. Like I told you, CNT. What is CNT?
Call money
Call
notice.
notice
notice
term.
and term.
Yes, call notice term is enough. Okay. If you will remain attentive in the class, you are going to learn many things in the class itself. Okay. So use this when you speak CNT. Then your mind will find what CNT is, call notice term, right? Similarly, treasury bills 91, 182, 364. CP and CD. CP is commercial paper, CD is certificate of deposit.
Deposits.
Fine. CDs are issued in which denomination?
A multiply of
1 lakh.
1 lakh.
CD, that is certificate of deposit. These are issued in multiple of 1 lakh.
1 lakh.
Okay. So, and these cannot be, CDs cannot be issued for less than 7 days and not more than 1 year. So
1 year,
can a
okay.
bank issue CD for 4 days? False.
False. No.
7
Can a
days.
bank issue CD for 6 days?
No.
False. Can a bank issue CD for 15 days?
Yes.
Yes.
Can a bank issue CDs for 390 days?
No.
False.
No.
Can a bank
False.
issue CDs for 367 days?
No.
False.
False. Can a bank issue CDs for 366 days?
False.
No.
Maybe. In leap year,
Uh,
you have 366 days, no?
Yes.
Who said no? So you have to be careful.
Yeah.
Okay. Is it clear?
Yes.
This is it for today. I hope you found the class interesting.